pay attention to the price, even though the price is going parabolic. Parabolic's not the right word. Let me rephrase it. The price had a parabolic move in a very short period of time. Now, parabolic, that's not even the right word, I guess. The more I think about it, it's up 40% this year.
Right.
It's
Right.
outpaced all the other metals. So that's not really parabolic, but it's strong. It could be the parabolic move coming that we're all expecting, where it blows through 50 and then keeps on going, just based upon the price ratio of the
Yeah.
past 100 plus years.
And there's no resistance between 36 to 50. If we would have seen 42 before, 47, then it corrects back down to 45, there's no resistance between 36 to $50.
No,
Last
there's
time
not.
it hit 36, it went to 50.
Well,
And we're
the
talking,
crazy thing is coming out of the ground at 7 to 1, but it's priced now. It's broken that 100 to 1 ratio level down in the 90s. But if you look at what it's averaged, its price average, literally the last 100 plus years, it's about 45 to 1. So if you take gold right now at 33.30 and divide that by 45, 33.30 divided by 45, you get $74.
yeah.
So silver should be $74 an ounce. Now, that's 6 times higher than it's coming out of the ground at. So 33.30 divided by 7, according to Keith Newmeyer. And what do you get? You get 33.30 divided by 7, 475. Now,
Yeah.
if you told me silver was $475 an ounce next year, I would say that's pretty damn aggressive. Probably not going to happen. But from a standpoint of its ratio in relation to how much gold versus how much silver is coming out of the ground, I guess it would be a logical statement. But to say that it's priced right now at a 92 to 1 ratio, um, with the demand that we're seeing, I would say it's the value of a generation. And I think it's just getting going. Now we'll see what happens here, but I really think we've seen a weekly close above 36. We need to see it close monthly above 36.
Yes.
$35 level. The interesting thing about that $35 level is that there have been, I want to say, let me see the number. There have been, I want to say, 7 breakout attempts. That's right. I wrote this down the other day. 7 breakout attempts at 35 since 2011. They've all failed. The fact that it's broken out above 35 right now is a significant event. And we'll see where it finishes here. We got the Fed numbers coming up and the non-farm payrolls, all of the key pivot points where the players like to suppress and short the price and knock it down. But there's so much physical demand right now that's standing for delivery. It's as stupid as a mud wall to be on the wrong side of this in a naked short position. And I think the traders are figuring that out in gold, as we've seen a tremendous amount of gold covering. Since the beginning of the year, nearly 150,000 COMEX contracts have been covered. That's 15 million ounces of gold. And this is why we see gold continuing to march higher no matter what the news is. Silver will follow it. And it has a very, very similar technical pattern the way that gold has. In
Yeah.
fact, it's
A little more
covered
volatile.
45 years long.
Yeah. Yeah. I call silver gold on steroids. And I say steroids specifically. People don't understand why. Steroids have not negative side effects too. It's more extreme. It hits higher highs, but also lower lows. That's why people say it's a little riskier. You can't, it's so stupid calling a safe haven asset risky. But yeah, silver, it's like a more exaggerated version of gold. When people talk about the gold to silver ratio and do the numbers, I always start with $5,000 gold because for me that doesn't sound crazy at all. Like if I could see gold going to $5,000 with the ratio at 16 to 1 or 7 to 1 or whatever, we're talking about a lot higher of silver. And I've always said for years since 2019, people have asked when I think silver would quote unquote explode, and I've always said by the year 2025, 2026. I've been saying that since 2019, and it's just because everything, the numbers add up from the shortage, from the supply deficit. Everything looks like in the way we're going green right now. With UK just announced they're mandating every single home now use solar panels, which is a huge deal, and we're gonna see more countries doing that. It's the way we're going. It's just not realistic to be able to keep up with this type of demand. And investing 101, low supply, high demand does what? Shoots the price up. You could try to suppress it, but eventually that's going to crack, especially right now with the COMEX as well. Why do you think all these countries, the biggest banks, the most powerful countries, the wealthiest people are all buying silver? They know something, you know? So,
Well, you're right, and standing for delivery. And look, right now, look, $3,500 gold is easily in play, right? And a 60-to-1 ratio would be above the 200-year average. And that 60-to-1 ratio at $3,500, you're basically $60 an ounce silver. So these numbers are not unrealistic whatsoever. You put it at $4,000 an ounce, you're at $70 an ounce silver based upon, and that's nowhere near the mining ratio. That's just historical averages.
right,
You
right,
get up to
right.
5,000 and the numbers start to move. Look, the we've talked about this at length, and we also talked about how the guys at silverwars.org have done a good job at
Yeah.
showing how much silver is needed in the military industrial complex, who has had vested interest in perpetuating war. And in order to do that, you need to have silver to make high-tech weapons. And it's interesting when you look at who's behind all of this. Wow, I got this thing sticking out there. You look at who's behind all of this, and BlackRock owns the military industrial complex.
Mm,
BlackRock owns all of the military contractors that make all of the high-tech weapons. They also are the primary custodian with JP Morgan in the silver ETF, SLV. They're major holders in PSLV. They have their fingers in the pie of not only the silver market, which is used certainly to build these high-tech weapons, but they also have their fingers in the pie of the military industrial complex, the companies that are making the weapons. So they suppress the price of silver to make the weapons. They sell them all around the world. They blow up countries like the Ukraine, and then they come in and get the reconstruction contracts. BlackRock does. It's a let's build the weapons, blow up the country, come in and get the reconstruction contract. Sounds like a great deal, and then sell that country that's been rebuilt weapons to protect themselves moving
right.
forward. It's a
Yes.
crazy roundabout, but that's what's happening now. That works in an environment where the dollar has no challengers. That works in an environment where the dollar and the U.S. government are respected. That works in an environment where, you know, we are not the most indebted country in the world with all sorts of problems at home, not only with debt, but look what's happening in Los Angeles and now
Right.
in Dallas and in Austin. You have again more insurrection, and I don't know. The idea here is that the biggest money in the world has been accumulating gold and silver and taking possession of it.
That's
That's
the
what's
big
different.
part.
It
That's the
is. It's
big
what's
part.
different. No one's ever taken possession quite the way that we're seeing right now, and that is the delineation between the ability to suppress the paper price and not, because you can suppress the price if no one ever stands for delivery just
Yeah.
by writing and creating money.
What happened last time we saw something similar? The highest price silver's ever been till this day, the Hunt brothers. Last time. That's not
Well,
a coincidence.
and it's interesting. You go back to again. I think the highest closing price I think was 2011 for a
It was
brief
higher.
second.
It was higher than 1980.
I think so.
I
For
thought
one
19.
second,
Oh, okay.
I'm pretty sure the closing price.
Yeah.
I could be wrong, but it's really close.
Yeah,
Anyway,
it's
the
like a
point
couple
is,
pennies away.
in 2011, the dollar index was roughly 76, 77, 75, 78. Maybe you can look and see somewhere in that neighborhood. The dollar right now, which is moving down, it's lost 9% for the year. We're still well into the 90s. So, and we have silver at these levels. Now you see the dollar index continue to fall. The sky's the limit for silver when you talk about the strain we're seeing. One of the things that you and I haven't had the chance to talk about is what's happened on the LBMA. Now, I haven't heard lately what the numbers are, but the amount of deliveries coming off the LBMA has been parabolic. That's where most of the silver coming into the United States has come from there in Switzerland. Now, London is what's called a T+1 settlement market, where T is the trade day plus one is settlement, and the metal should be moving your way on day 3, in theory, right? Well, so much of the metal came in under the guise of tariffs at the beginning of the year. And then I think they caught on like, this isn't just tariffs. There's something much bigger going on here. And they all of a sudden, the Bank of England says, sorry, we are a T+1 market, but we've had to go to T plus potentially 8 weeks because there's a shortage of manpower and trucks to move the stuff. So you're telling me the Bank of England doesn't have enough in the way of manpower or trucks to move people's silver or gold. Now imagine that you owned the Silver Slayer jewelry empire all around the world, and you sourced good delivery bars, both gold and silver, in London to fabricate jewelry. And you are on a schedule of fabrication, and you're expecting to get these bars in short order, and they say, listen, we're really sorry, Slayer, but we don't have enough trucks to move your shit. So you're looking at maybe 2 months delay to get your silver. Now that's a default, in my opinion. These are the kinds of things that we are seeing as a result of these increasing deliveries. And that's where the game starts to really change for the ability of these companies or these banks or these hedge funds to continue to naked short. Now they have, I believe, got the message in gold. And you can see that by the huge amount, 15 million ounces of gold have been covered since the beginning of the year. The commercial banks, I think, understand that this is not a game to be naked shorted. Now, I don't know what's going on with silver because I see the naked shorting or the shorting on COMEX is still pretty high.